Hi, everyone. Welcome to this Landmark podcast. Today we are looking at our residential property transactions milestones data. I'm joined by Ben Robinson, who's the Managing Director of Landmark Estate Agency Services, Graeme Edwards, Managing Director of Landmark Valuation Services, and Rob Gurney, who is Managing Director of Ochresoft Conveyancing Solutions. So we are here today to talk about Landmark's latest data released on property transaction milestones. So this is the third year we've done this analysis, looking at the time it takes for transactions to step through certain milestones as part of the process. So we're going to talk about the data that we have around that. The full report is available on the Landmark website, so anyone who'd like to see it, head there. You'll be able to download it. And there's three key topics we want to talk about today. The first of it, which is, without giving away the data, why don't lower volumes mean faster transactions? The second one is to discuss what the potential solutions might be. And the third one, being a data and technology business, it would be remiss of us not to talk about how technology might be able to help. So firstly, looking at the actual numbers, so the data from our recent report tells us it took 120 days for conveyancing instructions to move through to completion in 2024. Whilst being slightly down on 2023, it's only 3 days lower than 2023, but still 15% longer than 2019, where it was 104 days, and 60% longer than 2007. And what we know about the current market compared to 2019 and especially 2007 is we are seeing lower transaction volumes and many lower transactions than we would have seen at 2007, which was the peak of the market pre-credit crunch. So I'm going to go to Rob first. Rob, from your point of view, from the conveyancer's angle, why do you think that lower volumes haven't led to faster transactions?
Yeah, thanks, Mark. I mean, first of all, it's a pretty logical expectation, isn't it? If you think that, I don't know, an average caseload that a conveyancer's running might be sort of 50 or 60 files. Well, if you take 10 or 20 of those files away, then I think it is a perfectly sort of logical expectation that they might be able to progress those matters faster because they have less number of clients to keep happy. But I think when you dig a bit deeper, you can start finding other reasons why we're sort of in this situation where we do have lower transaction numbers, but we do not have a corresponding lack or drop of transaction timescales. And I think for me, I've highlighted three reasons for this. The first one is quite simply, there's less conveyancers in the profession than there were. Recent publication a month or two ago suggested there was a 15% fall off in the number of active conveyancers in the profession, and that's since the pandemic. So that starts getting us to see that we're not sort of comparing apples with apples here. And if there's less conveyancers in the profession doing the work, then that perhaps starts giving an indication as to why the transactions aren't going through as fast as perhaps otherwise you would expect. And then the second point, which I think is worth talking about, is that actually that 15% that we've lost to the industry, well, the belief is that there's a lot of experience that's been lost as well. So, for example, the senior members of staff that perhaps have done conveyancing for many years have left the profession, and those that have sort of replaced them perhaps are more newly qualified, perhaps less experienced. And again, it's quite reasonable to think that might have a detrimental knock-on impact overall in terms of average turnaround times of caseloads. But for me, and I can't stress this enough, by far the biggest culprit here is what we talk about when we say a scope creep. Quite simply, even if conveyancers do work more efficiently with less caseloads, the role of the conveyancer and the number of additional responsibilities that's been added to that role of conveyancing means that it still takes longer despite less volumes. And it is estimated that the number of responsibilities that's been placed onto the conveyancer in the last 15 to 20 years has actually doubled. So I think our expectations need to be adjusted, Mike. That's the sort of the takeaway from all of this. The job isn't the same as it used to be, so we shouldn't be comparing it or expecting it in the same way.
Really interesting. Thanks, Rob. Um, Ben, pass over to you at this point from the voice of the estate agent. What do these longer timescales mean for estate agents?
I think it's all impact on the bottom line, ultimately, Mike. If you look at most estate agency models, although we've seen new ones come in where they do charge up front, are no sell, no fee. So they don't get paid and unless the transaction completes. What do longer transactions mean? Usually more uncertainty, higher fall through rate. And we've seen that. In fact, if you look last year, there's industry commentary that about just over 50% of properties that were listed for sale made it through to completion. I mean, that means half the work that agents are doing to get properties ready, listed and marketed is actually paying zero out if you're on no sell, no fee. But it's not just fewer transactions making it through. There's a challenge with the transactions that are going through at all. And that's because if they're taking longer, there's increased uncertainty, even if they do complete, increased uncertainty and longer timelines or longer time to manage the transaction means more effort and time spent allaying fears, dealing with new challenges, and generally having to communicate. So you find most agents now, will employ progressors, and all their job is there to do is just progress transactions, update people, and make sure you keep things on track. It also means that you end up in bigger or larger chains as part of that as well, and larger chains again mean more uncertainty, but more effort to chase and keep people updated, and often more parties actually to update. So what you're seeing for agents is less income from the same number of transactions, but actually more work. So increased cost of taking that through. So it's bottom line impact, and it's huge. It's having a hugely detrimental effect.
I can imagine the cost of having to employ people to manage something, and then half of them not actually paying you must be huge. And Graeme, finally, moving on to you, last but not least, what do these delays mean for mortgage lenders?
Yeah, thanks, Mike. Well, I think first and foremost, I think what we need to remember, it's quite a difficult time for lenders in the sense that we're operating in and we have been for some time now, a very volatile economic climate. We've had high inflation for some time now. We've had what some term a cost of living crisis. I would say cost of living challenges for people, and that's relatively high swap rates as well, which has resulted in not just higher lending rates, but lender rates that are only on the market for a short amount of time. And I think in the context of longer transaction times for lenders, basically all of that means that lenders have a lot more difficulty in pricing their rates, and often they have to sort of price these risks and challenges into their rates, and they have to sort of price the risk in, and that makes life very difficult for lenders. I think the other thing is that longer transaction times potentially result in increased number of fall throughs, can eventually lend itself to, the longer a transaction goes on, the likelihood that an individual's circumstances may change. Somebody's maybe lost their job, or they failed a final credit check, which means a mortgage can't be offered or has to be reoffered at a different rate or a different LTV level. And then, from a broker perspective, even, I mean, I have a friend who's a broker, and he was telling me the other day that he spends half his time rewriting business. So I think it's just general. I don't want to over dramatize, Mike, but it's sort of this general sort of turmoil in the market makes it very difficult for lenders to price their rates and achieve any kind of sort of stability, really.
So it sounds very similar to Ben's view from estate agents
Correct.
for lenders and brokers,
Yeah.
that you've got an awful lot of work happening at cost without any guarantee of income.
Yeah.
And then add in market volatility, makes it especially hard. I think we could do a whole other podcast on the changes in mortgage prices over the last 2 or 3 years, and potentially future ones as well, with tariffs, etc., impacting the economy. But yeah, that's a really
Exactly.
interesting answer. Thanks, Graeme. So our moving on to our second topic, which was potential solutions. I think one interesting thing that everyone wrote about in the commentary around in the report was around the benefit of collecting the right information at the right time, and the more of that you do as early as possible, the better the overall outcome, and the smoother the overall transaction can happen. Rob, I know you've got a great analogy about a bakery, which I won't steal from you, but I think it's a really good way of putting it. And if you look at, not too far away in Scotland, where this happens with the Home Report, we know that transactions are happen much more quickly, and are much less likely to fall through. So there's proof, in a very similar economy, that that getting the right information up front really does make a difference. Rob, I'm going to come to you first because I've led in with your analogy. How do you see that kind of data collection from the conveyancer's perspective?
Yeah, thanks, Mike. And yeah, we'll get to the bake analogy in a few minutes' time. But for me, quite simply, the current process that we follow needs to change. And I'm not saying like government legislation, but what I am saying is the current sort of BAU standard process for how a lawyer gets engaged in the property process. We know that with material information and upfront information becoming a bit more prevalent in the market, that there are more and more lawyers that are getting instructed earlier on in the transaction, i.e. before the sale is agreed. But in the majority of cases, the lawyer still only gets instructed when that property is sold. And that's where the analogy kicks in terms of, if you own a bakery and you're open at 9 o'clock, you don't start baking the bread at 9 a.m. because you're going to have a queue of people waiting outside the door. You start baking the bread, hours beforehand, so that it's ready to sell at 9 a.m. That's the whole point. And it sounds obvious, but for me, that's the craziness of the current conveyancing process, that we are waiting until 9 o'clock before we start baking the bread. And by changing this, we do open up huge efficiency opportunities. Utilizing the upfront information and the material information that estate agents need to collect to prepare comprehensive contract packs even before the property is sold, for me, is a huge, sort of move towards making the actual conveyancing process so much more efficient, because there's no toing and froing, no chasing for information. It's already there. And one of the things that I get very excited about is this concept of eradicating unnecessary additional inquiries, because by putting the perfect, in inverted commas, contract pack together at the very beginning of the transaction, you do stand to basically eradicate the need to raise unnecessary inquiries that are already answered from the information that's been gathered at the very beginning of the transaction. And when we look at the stats that the Landmark have obviously presented for 2024, the inquiries process timescale has doubled from 26 days on average in 2007 to 52 days in 2024. I mean, that's huge. And it is also believed that up to three quarters of all inquiries are deemed unnecessary, i.e. could be resolved before they even get asked by the buyer's lawyer further on in the conveyancing transaction. So there is a massive, massive opportunity here. And I think that upfront information together with upfront lawyer instruction, or UFL, if you will, could make a massive, massive difference to this current very, very painful process. And yeah, thanks for stealing my thunder on the big analogy there.
It's my favourite analogy at the moment. Ben, going back to the estate agent side, upfront information, early gathering information, obviously relies quite a lot on estate agents being involved in that process. How do you see it working for agents?
Yeah, well, I think there's early adopters in the market that we know of that already do this process, collect information once well, and share it working with the seller's side solicitor at the start. And they're already seeing huge results from that. We mentioned about the wasted effort in the last section, but you're seeing there's increases of between 20 and 30% of the certainty in the pipe. Now, any agent would ask the question, if I could increase my income from the same amount of business I'm doing at the moment by 20 to 30%, I think they'd have to look at it. Not only that, but in reverse of what we said before. If you've gathered that information, it's reliable and there are less questions and it's moving forward with more speed and certainty, you have less effort needed to carry on afterwards. So all of those hours spent downstream are removed. And okay, there may be a little bit more effort at the start needed to do this right, but it pays huge dividends for the business, in the long run. And everyone who's doing it properly advocates that. Not only that, but you're then linking to material information, which is, a requirement, it's a regulatory requirement, and it's only getting tougher. Well, actually, it's pretty much the same information that you need for the transaction. There's so much crossover there. With an extra few bits, you're then not only giving yourself speed, certainty, increased revenue, and lower costs, you're actually maintaining your regulatory compliance, so you're at lower risk of fines, and you're actually using that perhaps as to increase your reputation in the local market, because I think consumers are becoming more aware when they go on Rightmove and half the boxes say ask agent, ask agent, ask agent, that there's something missing here. I should be able to get that information straight away, and I think that's going to be quite a powerful driver of behaviour. So there's all the reasons to do it. It's literally just a shift of mindset and a realisation that the effort early will pay dividends in the longer run, but you've got to be willing to take that step first as a business, which is always a challenge in when you're going to change the fundamentals of how you do it today. Linking that to how other markets see it. Someone mentioned Scotland before. I think Scotland does this stuff and it works, but actually even closer to home in auctions. In England and Wales, anyone an agent gets involved in auction, they get the solicitor involved with the seller, they get a legal pack together, and hey presto, it's complete in 28 days, exchange on the day. It works. So it's just about a mindset shift, I think.
Yeah, thanks, Ben. And Graeme, surely there's got to be good news for the lenders in things happening this way as well.
100%, and I agree with everything that Ben's just said. So if we think about mortgage valuations, Mike, typically, in sort of the recent past, normally what would happen is all the information about a property would be kind of like revealed, as it were, at the end of the process, when a surveyor or a valuer goes out to site on the property and collects all the information at that point. So any information that can be captured upfront, earlier in the process by other parties, e.g., an estate agent, capturing an AML, or doing an AML, or an existing EPC, for example, that could be shared with other parties, and eventually a valuer who's doing a mortgage valuation for a lender, that can only be a good thing. And then even from a lender perspective, we'll come on to technology, but there are a lot of lenders out there who are collecting their own data in terms of looking at risk on properties, things simple. Well, I wouldn't say simple, but traditional things like, has the property been flooded in the past? What's the risk of flood? Is there or has there been a risk of subsidence or coastal erosion, etc.? All of those things that can be collected and then passed down to a valuer to help them complete the mortgage valuation report will only speed things up.
Perfect. Thanks, Graeme. And moving on to our final topic of today, which is around the use of technology. So how can technology help? How can technology assist? If I get my teeth back in. So I know we're firmly of the mindset we discussed earlier on that there's a kind of shift in process that we need to happen, and I think you can have all the technology in the world, and actually there's lots of technology available to every professional in the residential property market, but where the process doesn't work efficiently, essentially we're either trying to speed up little bits around the edges or using technology, and the core issues not being solved. But where the process does shift, and we've got the data being collected earlier on, and lawyers being instructed earlier on, we know we can make life easier. Technology can then assist even more and make a streamlined process even more streamlined. So, Graeme, I'm going to jump back to you really. So, from a lender's point of view, how do we see technology helping in a scenario where we're collating more information up front, instructing the professionals early on in the process?
I think, do you know what, Mike? I'm going to say something that could be construed as controversial, and I think the sort of phrase is, where there's a will, there's a way. I think in this case, the way is there. It's a question of where's the will, because I think the technology exists now, and I think the key to it is collaboration and trust. So and that's what I mean by the will. So if everybody uses trusted data and accepts that data is certified, trusted, whatever, and then at that point it's able to be shared, and everybody has those sort of common standards in place, it then becomes much easier because the technology's there, and certainly from a landmark perspective, the technology's there now. We have the benefit of being maybe one of the only providers to the industry that covers all segments. And so if you look at our common platform, which is Landmark Connect, that has the ability to share data between parties in a property transaction. So I think the way is there. The question now is, what's the will and what can we do to help the industry sort of come along on that journey? That's a sort of general point I'd make. I think from a lender perspective, there are technologies there in place now. So, for example, there are a lot more lenders now using AVMs, and a lot more lenders now who are relaxing their lending rules, for want of a better phrase, in terms of LTVs, and relying more heavily on AVMs to provide a valuation, more quickly and in the process, as opposed to maybe sending a valuer out to a property. And we're now seeing valuers themselves, especially the big ones, using their own AVMs for their lender clients. So the technology's there to do that. We've also, there are also risk models that can be used that rely on certified and trusted data. And I think when a property valuation has to be done, a physical valuation rather, by a surveyor, then there are technologies there that can capture and receive the data that has been transmitted down the pipe, and also allows surveyors to actually do the valuation on a tablet, which makes things a lot quicker, a lot smoother, and a lot more accurate, to enable that valuation report to be returned in quick time for the lender. So the technology's there, I think, Mike. I won't go on any more about it, but I think there needs to be a sort of mindset shift in the industry to get everybody along on that journey at the same time.
I think that AVM point and the lenders looking at, you talk about kind of relaxing the rules around AVMs. I feel like that comes from an increased trust in the data and the information as well. So the more trust there is in data and the quality of information that you're using to make your decisions, the more faith you can put in it. And from a lender's point of view, that means relaxing the rules that you might put around when you do and don't use an AVM for underwriting.
Yeah.
Ben, over to you. From an estate agent's point of view, how can digitisation and technology help?
Well, we talked before about changing the process can feel like hard work, so it's anything that can help facilitate that, to be honest. And I'm always a big believer in changing the process or optimizing the process before you try to digitize. And I think a lot of the technology that exists right now is very disparate, separate, and there to soothe symptoms as opposed to fix the disease. But there are technologies that can help. And I mean, obviously digital AML, we have a Landmark Agent platform which helps on board and do the Know Your Client due diligence. And if you look at AML as a whole, that's one of the biggest whinges in this process. A consumer might have to do it 3 or 4 times rather than once, but can we do it once well and share it? So if you look at that, it's gathering data of some kind, gathering answers, whether it's AML type data, property type data, material information type data. You've got to gather some of that, providing that from digital sources. So is it digitized and trustworthy? Because there's no point just using any old free stuff that you can find on the internet, because you've got to be able to transact. And if you can both gather and ensure the trustworthiness of that data, you can then share it. And other people are willing to use it because, of course, if you're a solicitor and you're taking legal responsibility for that transaction, you want to make sure that that answer came from the person it was supposed to, or that at least someone's there to back it. And obviously, from a Landmark perspective, in our individual silos, as we work with in the moment with the different sectors of the industry, we do gather and back our data, and we do have professionals, whether it be lenders, solicitors, agents, who make decisions based on that data. They could trust us to provide it. So, we very much, I think, can be part of that discussion, part of helping that industry, collect, gather, provide, and trust the data once well and share it. And I think in doing that, we'll get to the optimum solution, which brings back the agents making more money for less effort, which is a nice place for all of us.
Yeah, absolutely. And finally, Rob, how can conveyance benefit from technology, and how might it mitigate some of the workload on them and this scope creep you talked about earlier?
Yeah, I mean, a lot of what I've got to say kind of echoes what Graeme and Ben have already mentioned, but obviously from a conveyancer profession specific standpoint, there's loads of solutions that are currently on the market in terms of technology, to the point where I think the profession actually is suffering from what we'd call tech fatigue, because there's a lot to choose from, and ultimately because we've already been through the statistics, we know that transaction timescales are getting longer, not shorter. Any technology that is being adopted isn't having the ultimate benefit of increasing throughput and reducing timescales. So that's not to sort of belittle existing technology solutions. They absolutely are worthy of attention. It's just that they're not currently transforming the process. They're kind of, as you've already said, Mike, they're sort of operating around almost like the edges, in their own way, creating efficiencies to a problem that the conveyancer faces in terms of their responsibilities, but there's no net gain in terms of time saved.
And going back to your scope creep point of view, is it fair to say that sometimes they're solving problems or inefficiencies that weren't there at all 5 years ago, because it's a new requirement that's now more efficient to manage, but wasn't anything that a conveyancer even had to look at previously?
Exactly that. If there's a responsibility that didn't exist 10 years ago, now does exist, and there's some technology to help the lawyer to shoulder that burden, of course they're going to use it, but it's not going to speed up the process because it's not quicker than not having to do it in the first place, if that makes sense. So I think we just need to make sure that we're always considering that. Let's not compare conveyancing and to what it was 15 years ago and think that nothing's changed, because it absolutely has. So like I say, yes, technology is the answer to achieving efficiencies, but it's actually large benefits that are only going to come from tech that facilitates changes to the actual process itself. And so these are the ones that I think conveyancers need to be focusing on going forward. And I think it would be remiss of me not to mention the fact that the automation and AI, they're coming. They're already here, and it's moving very, very, very fast. And so my message to the law firms out there that perhaps aren't looking at AI and automation to assist them with efficiencies in their processing is you absolutely need to, because you're going to get left behind if you're not careful.
Perfect. It's a good note to leave it on, Rob. Thank you very much. Thanks, Graeme. Thanks, Ben. And thank you, everyone, for listening. Just one final reminder that you can download our property Insights report, our milestone report, and many other reports on landmark.co.uk. Thank you very much.